Hello, and welcome to our next webinar in this series. This is about getting your IP project unstuck. Now, if you're an inventor or head of an R&D team, this is going to be very useful for you. My name is Daniel O'Connor. I've been commercializing intellectual property now since 1983, and I've been teaching it since 2012. Now, the purpose of this presentation is firstly to break some of the myths associated with how inventions are commercialized. The second is to share with you some of the processes we use in the Inventors Academy to make sure these inventors succeed with their projects. And the third, I'll be able to answer any questions you have through the R&D session at the end of this, if you care to stay on afterwards. So let's get started, shall we? The first question I want to pose to you is, what if there was a 7 or 8 figure business behind that big idea of yours? There isn't always, but there could be. What if there was and you didn't know about it or you couldn't prove it? How will you know? Well, there are a number of ways to do that. One is by doing these particular things. If you run competitive and quantitative research before you get started, you'll save a lot of money in the downstream because you'll know whether or not your project's worth patenting and everything else. But knowing how the market works, who buys what to solve the problem, and we drill down and focus primarily on the problem. And after we've got the problem sorted out, who has it, where do they go to solve the problem, how much they pay to solve the problem, how many times a year do they solve the problem, would they pay more to solve the problem, or are they looking for something cheaper to solve the problem? What if they choose not to solve the problem? How much does that cost them? And then we work the quantitative side of it. So how many times would they buy it? How much would they be prepared to pay? How many sales overall? How big is the problem in terms of numbers of units that could be sold and then resold? Once we've done that, we look at waivers and non-disclosure agreements as a way of protecting what you've got. That's important because a patent costs a lot of money and you don't know whether the project's viable yet. So what's the point in having a patent? But I'll go through that. We then calculate your pricing, costing, and sourcing. Now, pricing and costing is pretty easy. One is how much you'll sell for, the other is how much it's going to cost to build or make or design or whatever. And there's fixed cost and variable costs. For software, for instance, it's nearly all fixed costs. You've got to pay up front to get somebody to write the software. Variable costs are how much per extra unit does it cost to make each one. For a plastics injection molding, it's a high initial cost, and then it's a very low, but there's still a marginal cost on the product, and that's your variable cost. You also need sourcing. You need to know that you can get hold of all the components and ingredients that are needed. You also need to know that, if possible, you can stop other people from getting similar components or ingredients, and where you would get them from, what the price will be, and whether the price can be locked in for a particular term, so you're not subject to price variations on your costing. Once you've done that, we build a commercial model. I'll explain later what a commercial model is. It's the most important thing that you'll have. Then we finalize your first cash objective. It's important that when you set out to do this, you only look at one significant cash generating transaction. That won't make you profitable, but it will give you enough cash to go for the next one, and then the one after that, and the one after that. So you're constantly building up your cash flow and also working towards your scale. Then you have to prove the concept. Proof of concept is very important. But before you start, you really need to know that this can work. It doesn't mean to say you have to have a prototype at all. You can do this, just proof of concept can be done on desktop. Then you have to create your minimum viable product. That's an important part of this, to make sure that, yes, it's all working and it's going to cost that and it's going to be something that people want. Once you've done that, we start approaching prospective buyers or investors if you need that. We make sure that we can qualify what you've got. Will these buyers buy it? Will they pay that? We don't talk to them about the product. We talk to them about the problem and how this would solve the problem. And they would give you an opinion based on solving the problem, not on what you're selling. Because I can tell you, if you're going to build something and sell it, you take it along to somebody and say, what do you think of it? They're going to say, it's a great idea, terrific. You don't know that they actually will buy it until afterwards. But if you talk about the problem and how much does it cost you to solve this problem, and would you look at something that does this, this, and this, and will also solve that problem? And in a case like that, they have a much more willing and accurate answer for you. finally, you test this whole idea with prospective sellers. They're the retailers, the distributors, the licensees, people who are going to be involved in the project and probably at this stage control the channels that you're looking at. So if you talk to them first, you'll have a pretty good idea that your project's going to work or not before you even get started, and you haven't spent that much money because most of this can be done by you. Now, what's the way to do this? The things you shouldn't do if you're going to get started. One of them would be getting a patent to protect it, because a patent doesn't cost much at the beginning. It can cost you anything from $300 do it yourself up to $5,000 to get a competent patent attorney to draft everything up and table it and research it and lodge it. But in doing that, that's an affordable cost perhaps, but it starts a clock, and that clock ends at 365 days. And at that point there, you are going to have to pay out upwards of $60,000 to protect it. Otherwise, it becomes public domain. Very risky. Some people like to go out and get a design and then build a prototype. And that costs a lot of money, but you don't necessarily have to do that to know whether or not you're going to be successful. Some people run with all of the projects at once. We make people focus on one project. If you get one project over the line with cash flow positive, you can actually use that money for any other project, but most important, to accelerate the project you've got. Some people like to display at a trade show and see what interest they get. That's pretty much inviting everybody at that trade show to come and have a look at what you've got and to see what they want to do with it before you even build it. That's a danger. Might be you think that it might be a good idea to build some inventory. I can tell you that won't be. Building inventory doesn't mean that people will buy it, because you might have the packaging wrong. You might have one or two things left out of it. And at that point there, getting this done, getting a decision on whether this will be profitable or not, doesn't require inventory. Some people like to go and order the equipment they need for a production line to produce this well before they've got an idea of how much it's worth. That's not a good idea at all. You're better off just estimating, getting prices and calculating that, but not actually producing anything. You might want to think about approaching wealthy investors for funds. They are not your market. If you don't have cash flow, wealthy investors will look at this. They have other options, and their other options have less risk because they have cash flow. People buy into cash flow. They don't buy into IP with high risk and perhaps high rewards, but unprovable. We'll show you how to overcome that. Now, you might think that by having a group of investors for the start and then following that up with approaching more investors to keep going is a great idea. I wouldn't agree with that. What that does is it dilutes you further and takes all the control away from you and gives it to the shareholders. And as a result of that, you'll end up being a backseat player in a backseat driver of your own bus. Now, the process we're talking about here is sometimes called the wilderness. It's between, it's also known as early stage commercialization, and it's from post-ideation. Ideation is where we build up exactly what we're going to decide exactly what we're going to build, how it's going to look, what it's going to do, etc. Fit, form, and function is all defined at this point at ideation. Once you've got that, you've done your pricing, costing, and sourcing. We then take a project from there all the way through to pre-scale. Pre-scale is where we can put this in front of, with all its cash flow and all its assets and all its protection, put it in front of a venture capitalist and say, what do you think? If their reaction is, okay, if I put 10 times the equity into this, I'm going to get 100 times the output, let's share that, then you know you've got a project worthwhile. And that is pre-scale. That's the point when you're ready to scale a project. What we're focusing on will always be a significant cash generating transaction, your first one. That's your first focus because it takes away all your risk. It'll increase your cash flow, it'll reduce your risk, it'll open up options for you, and most importantly, it'll get you all the way through to scale if you keep repeating that. It could be the same one, it could be a different one. But those cash generating transactions, we define them. There's 4 main ones that we go after to make it viable for you. So why is this process so hard? Well, The process needs a different set of skills from what you're used to. Chances are, if you're a good inventor, you might be an excellent engineer or a scientist. That doesn't mean to say you've got the skills to take your project from where it is through ownership, protection, investment, right through transition to market, and then bring it to market and then dispose of it so everybody can realise the value for that. The main struggle is always about two things: cash and know-how. If you understand what you have to do and you have the money to do it, you're not going to run into too many problems. Most inventors, they launch without the funding that they need, and then they try and get the funding as they go. And that means they're in a constant hunt for funds and they're a constant dilution of your equity. They struggle to value the intellectual property without a cash flow, and therefore they have to sell very low. And as a result, you're giving away quite a bit of your project and you pretty soon won't have any control left. Now, no investor wants to be the first to invest. So they're all going to say, great idea, terrific. Who else have you got? Tell me where you're going to get the other money from. I'm not going to put it all in. You come back when you've got someone else, and they're all going to be the same doing that. If you're talking to high net worth investors, we do it a different way to make sure that doesn't happen. If you race it after patents, designs, and prototypes, they all cost a lot of money. And if you start off with a handy little budget and you blow it on patents, designs, and prototypes, then you've got nothing to commercialize with. And that's going to really, firstly, it's increased your risk. And secondly, you've got no prospect or reward if you can't get this to market. Now, it's also a good struggle to contact corporate buyers. We find this a lot with major companies who might be retailers, distributors, licensees in the bigger countries, in more advanced economies. When you ring their number, you're talking to a receptionist who might be outsourced, might not even be in the same building or the same city. And that person will not know who the person you'll need to talk to is, but will take a message, or she'll direct you to a website which has a generic form. Please fill this out with your inquiry. That is death by 1,000 cuts, waste of time. So you need to know how to contact these corporate buyers and corporate prospective licensees and product managers. You need a task list with a sequence of what has to be done now, what has to be done next. If you don't have that, you're forever stopping and starting your project. You'll get no momentum, and your project will take 5 years instead of 2 years. Learning on the job can take those 5 years, as I mentioned, and you can be done quite easily, but you'll learn through trial and error all the way through for 5 years. And the first one will be hard. The second one will only take 2 years because you'll know what to do. But our way can be done in 6 months. Now, here's a dose of reality about this industry that most people won't tell you. To experienced investors, intellectual property is a very high risk. They won't put money into intellectual property because they are offered other opportunities. If you think about it, if I've got a lazy $10 million to invest somewhere and somebody comes along with an intellectual property for $1 million with a good return, I'm better off taking that $1 million and going out and buying a company in that industry if I wanted to get into that industry. And I'm buying a company with a cash flow, so immediately it's paying me back my capital, and I can use that capital to later on go and build something. So there's no correlation between high net worth investors and high investment. It doesn't work like that. Without income, you're going to double the risk that you're presenting to any investor. So, and most times you won't have a regular income from your intellectual property because you haven't reached that pre-scale stage. Commercialization is the same 6 steps. Doesn't matter what you need to do, how you do it, what the product is, the same 6 steps from commercial modeling all the way through to exit is the same. And we show you why, and we show you how, and we show you what these will take and what assets, what resources you're going to need to deliver. The intellectual property value is not in your idea. I can tell you now, this is one of the biggest myths we see. The value is actually in the commercial model you wrap around that idea. It doesn't matter what you've got, but if you can make money wrapping the idea around it, it's going to be much more viable. The skills are not the same as inventing. The skills for commercialization are completely different, and you need to understand that walking into this. that you're going to have to develop a whole different skill set, but that skill set is very important. Now, most teachings are on university intellectual property, such as they might have a science-based or engineering-based project or product. They get rid of it very early, and because they know that the buyer will contract back into the university to get the research and development completed, and therefore get a grant, and it would cost them less to do that. But the other side of this is on mega firms where your Apple, IBM, used to be always Microsoft and Apple. These days it's Tesla and a few like that. But when they look at these, they're looking at mega firms that have got big breakthroughs that raised hundreds of millions of dollars, and that's not who you are, not who you will be for a lot of years. So you have to get cash flow positive first, otherwise nobody's going to want to touch you. So if you take 5 years or 6 months to do this, it's a choice. 5 years if you do it yourself, and you can, and you'll save a lot of money or a little bit of money, but how much is that time costing you? And how much is that time going to eat into your opportunity if somebody invents something that does the same process or solution as you're proposing 2 years before you finish? Now, if you don't do this right, it might take years to fail. It might not be straight away. It might not be just that you walk in and say, okay, will this work? Won't it work? You haven't done enough research to know. You're getting a lot of promising yeses. You start designing, prototyping, production, everything, and running it out to the market before you realise this is not going to give me the volume I want or the price that I need, and therefore you end up collapsing it. Delays will help other inventors to beat you. They won't necessarily come out with the same product, but they meet the same solution to the same problem. They beat you to the market. That hurts, but it's a reality that you'll face. Funding can be a full-time job if you're not careful. We like to do funding once or twice, actually. Once to get your project to cash flow positive, and then we use that cash flow to repeat. But after that, the next time is to scale a project. So that's where you get 100 times the output. Now, if patents expire, your project intellectual property is now in public domain. So you cannot afford to run out of money and not be able to renew your patents. If that happens, I'm sorry, your everything, anyone can look up what you had and know that it's not protected anymore. The other problem you have is if you disclose this to somebody and you're in 10 months out of 12 for your provisional patent, they are in no hurry whatsoever to do a deal with you. They'll talk to you for 2 months, and then they either crush you with leverage, or they wait till it expires and do it themselves. So you cannot afford to do that. So delaying your patent applications and using other tools in your portfolio to protect your project is just essential at that point. Now, brokers who can raise you capital or go and do license fees and do license agreements or distribution agreements, they charge big money. They also charge big percentages, and they charge a lot up front. A lot of people think, oh, will you do it for a commission? Yeah, they'll do it for a commission, but they'll also charge you $30,000 for paperwork or something like that. And I can tell you, from what I know of the industry, many of those limit the amount of effort they do to whatever's been paid up front. And that's pretty much it. And so after that, they say, well, it's just proving impossible. And they might ring all their friends and colleagues. And if they can't get buyers, that's the end of it. See you later. You can't afford that. So you can't afford upfront big money. Learning to do it yourself is very important. Now, those brokers, as I mentioned, won't work for equity. Everyone thinks, oh, I'll give them 5% to go and raise me money, or 10% of a deal. Well, a deal is usually a 5-year distribution or a 20-year license. How are you going to pay for that up front? How are you going to pay for that once you do the deal when the license won't generate income for up to 9 months? So you've got to be prudent about that, and they will not do those sort of deals. They won't enter into it because they already know what you're facing. Now, also, one thing to bear in mind here is a bad deal can't be undone. If you've gone to contract, that's what you got to live with. And sometimes it's just worth throwing the project away and moving on to the next one if you've signed a bad deal. Sometimes you just walk away, not cooperate, and it's bad for you, it's bad for them, and you get, it makes it harder for you to struggle for your next project. Now, patents can expire while you wait for retailers or licensees to decide on what you want. And let me tell you, if you walk in to talk to these people at 10 months or later, they will wait. They will make your project expire so they get a better deal. Or they'll get it to the last day and then say, well, we'll offer you half what you want. And if you do this, then we give you some money to pay for your patents to protect it. And you're gone, you're done. Now, if you do this right, it can be very profitable, but not necessarily straight away. You need to understand that. Don't have expectations of $1 million in your bank within days of getting started. It very rarely happens. I haven't seen it for many years now. Getting funded to take you to cash flow is all you have to worry about for the first time. Getting funded to cash flow, then the cash flow is used to fund your next a significant cash generating transaction, and the one after that, and the one after that. Now, you don't pay for patents if you do this right, because the project will earn enough money to pay for the patents. That's how you're not reaching into your pocket or your savings. You do it, the project is doing it for you. If you do this right, the project survival, the rate of survival increases, particularly once you start banking cash, because at that point there, you're dissipating a lot of risk. Now, the checklists that we provide make you the expert, because you know what to do now, what to do next. There's no guesswork. You've got a long line of 6 months of this is what we're going to do to make sure we're cash flow positive. The first deal is always the hardest. Make no secret of that. You've never done it before. You get professional help a lot in the program that we do, and that helps a lot. But if you do it right, once that first deal is done, it is the hardest, but the rest become a lot easier. Now, once you've done the first one, we repeat those, and that gets you, many of those repeats gets you to pre-scale. That's when private equity funds and venture capitalists will want to look at your project and say, okay, you're now doing 5 to 15 million turnover, and you've got a high growth model, and we think we can 10x this by putting in extra cash. Most important, if you do this right, you'll build an exit for all the players, for yourself, plus all the people that have come along the way, the collaborators, the investors. Everybody needs to have a path out in order to get a path in. Otherwise, they're just not interested. These skills will be useful for you forever. If you do this and you're learning how to do it, and then you're implementing the learning, you're actually building it, turning your knowledge into know-how. And that is a very useful skill for the future for other projects you've got. You end up also along the way building valuable IP networks. So people from patent attorneys, IP lawyers, you name it, everyone you need to talk to that knows what to do to get you on, let's say, a home shopping channel or anything else. You're always going to have that, and be able to build that right through into your network and have it in your Rolodex, if you like. I'm showing my age, but well, that's the way it is. Now, always the number one rule, cash is king. Cash flow will reduce your risk or remove your risk once you've repeated it often enough. Get into, not necessarily to profit, but to cash flow positive, because you're using a lot of your cash to grow again and grow again. Now, where do you get these skills? Well, I'm going to give you a history of how this works. In the past, if you had a great idea, you had to save up a lot of money and give it to someone to go and get it done. These consultants, professionals, brokers, they're all out there. They do what's called a done-for-you service. So that done for you, you give it to me, I'll do it for you, give it back to you, and it only takes 6 to 8 weeks, and you've got an entire project. You sign off on all the contracts, or negotiate the finer details of those, sign them off, and you're operational. So something like that can be 6 figures in times. And so if you're a large corporation, it doesn't matter. You pay that sort of money. Now, down the bottom, we've got done by you. Done by you is a little bit different. Done by you is where we give you a book, give you some courses, and you go and learn, and then you implement it yourself. That can still get you from 5 years down to 2.5 years, or even 2 years at times, if you teach yourself, because it's going to accelerate, because you'll have checklists, a rudimentary checklist, or you'll know what you need to be able to focus on and where your problems are going to be if you are reading up on case studies, etc. So Now, the done with you is what we do with this program that I'm talking about here today. Done with you is all about jumping on board with a cohort of 6 or 5 other inventors and sharing the journey for 6 months, getting you to positive cash flow within that 6 months and making sure your project can then repeat all the way through to pre-scale. Now, a done with you program, this is how it works. We put 6 inventors into a cohort for 6 months. So you're working with 5 other inventors or inventions, because sometimes they bring 2 or 3 people into the program, and that's quite okay if you've got the same product. We don't allow any more than 1 product, but if you bring a team in, they can bring up to 3 people and be on the course. You all sign non-disclosure agreements for each of your projects and for others' projects. So you get to intimately learn all about the others and share their learning, share their growth and their all their problems, as well as their opportunities. We work through those over the 6 months. We're always sharing wins and helping each other with challenges. I'm there as a 40-year veteran. I'm mentoring and guiding everybody. We have a done with you planning and tasking. We sit down and we do the high growth commercial model, and we work out exactly how it's going to be done. And then that commercial model spits out an action plan with a task list. That task list is all about making sure that you know what to do and what to do next. And it's all measured out. It's costed, it's allocated for a person to be accountable for it, and we're all good to go sequenced. Now, in the learning phase, there's over 40 video-based online lessons, about 25 hours worth, but it's well worth it. It gives you case studies and everything else. And everything can make it work. And sorry, I had to put my dog out of the room here. He's groaning and growling. So we help build a solid commercial model. And that's the foundation of what we're going to implement. It also includes online, all your checklist templates, case studies, discussions are live with us, but all the online stuff you get access to for 6 months, and then you can continue after that if you wish by choice. We have weekly group coaching calls. That's where we put all 6 groups. Each of the group members all come together on a dial-in call. We use Zoom. It could be an evening or a morning, depending on where you are. And we go through, or we put you into a program that suits you, and then in timing, also the type of allocation. We don't always put the same type of products together or projects together, because we want people to have an understanding of differences. You might have software, you might have engineering, you might have pharmacology, you might have consumer product. It doesn't matter. We put them all together so you can see a difference of how the learning you're doing relates to your project, but also to other projects later, which is important when you move on to your next project. We do weekly live instruction at the end of each group coaching call, which we don't record. We do record the live instruction afterwards. So somebody may have a problem in a certain area. The next week, we'll actually address that and do a half-hour presentation on it and work through exactly that problem, dissect it, even though we've done an hour's worth of dissection and analysis and help and guidance and given tasks of how to get past this. The weekly live instruction gives a fully recorded lesson on that particular problem and how we solve it. So it brings it all together for others who weren't in that room. We also do, at any time, you can get an immediate one-on-one reach out call. This is important because if your project slows down or stops, it's like a marathon race. If you stop in the middle of a marathon, everyone will go past you. And you've got to assume that somebody going past you has the same sort of solution in their backpack, and they're going to beat you to the finish line. We can't afford that. So what we do is we keep your project moving. It's not just weekly group coaching calls. You get a one-on-one reach out call where you need it. And within 30, you can do that within 12 hours and be talking to me for 30 minutes. And in that time, I can generally solve the problem that you've got. So why me? Well, I've been commercializing since my first project in 1983. That was, it was called the telephone accounting system. If you remember checking out of a hotel in the 80s and you got your phone bill and it showed you who you called and how long you're on the phone for and how much it costs, we did that software. And we did it for talking to big switchboards or PBXs, and later on we built that up with distributing it to all of the resellers of PBXs. And in 1987, when the stock market crashed, we didn't want to work towards an IPO. So what we did is we trade sailed it to a large Japanese company in the PBX industry, and they took it and implemented it for themselves. And later on, I think they were selling it as well under a different brand. Now, I'm a teacher, coach, mentor since 2012. I've been working this program called the Inventors Academy. It's all based on practical experience, so it's know-how and knowledge-based. It's not academic. So we don't have anything to do with, theories and everything. You don't have to learn any scientific theories. It's all practical-based. This is what you do if this happens. Now, I work with individuals, I work with corporates, also work with NGOs. I'm the Australian member of the UN Task Force for Innovation and Competitiveness, and we work with in developing countries in the Asia-Pacific region. I've also published books, including Billion Dollar Napkin, which is available, and I'll give you details of that a little later on in this at the end. I've always sharing tips on LinkedIn. If you join me on LinkedIn, you'll see that I'm forever sharing tips and also links to podcasts and things that I've done with other people. I have over 100 case studies in YouTube. Some of those are aligned to the course and not available, but others are freely available. You can go through and have a look at them. You can also join my weekly newsletter. For the moment, I've got just over 90,000 inventors who are receiving that newsletter every week. So you can join that, it's free. Now, I keep the focus on early cash flow because I know that's going to make the biggest difference for any IP project. Early cash flow eliminates risk and makes sure your project can be assured. And finally, I keep you realistic about your potential. I'm not going to promise you've got a 7 or 8 figure project if you don't, but there are plenty of 7, 8, and 9 figure projects out there that I've done in the past that could be done again. And there are plenty out there that are going to be discovered. And yes, I can help you with that. So what do we all do wrong? Makes all this so hard? Well, firstly, let me introduce you to Jeff Zvander. Jeff is in Wisconsin, USA. Jeff he's developed a hearing aid insert called Grub. He's very good at design. He built this Grub product to fix a problem, and the problem primarily is that 30% of people who put hearing aids in or get hearing aids stop wearing them after a few weeks. And the reason for that is because they're painful. And what he's done is he's designed a very thin and very flexible amplifier that goes into the inner ear. And he then used it, instead of building the whole lot, he only used it so he could connect it to any of the other behind the ear devices, so that he wasn't challenging the big players here who make all their money on the behind the ear devices. So he fixed a problem for 30% of the market, which is huge. Now, he knew he had to price this competitively. He knew that it wasn't about him making money. There were other people in the value chain that had to make money, including these multinationals that control the industry. So his price had to be very competitive, and that's what he set out to do. He had that in mind at the beginning, and it paid off at the end. Now, he had no understanding of the intellectual property commercialization process, and that's fine, because what he did is he reached out for some help. And what we were able to do with him very quickly, we did his commercial model, so he knew exactly what he's got, what he should focus on, what the limitations were, how he's going to get to market, how people are going to buy it, how people are going to pay for it, how he's going to service it. Is it going to be licensed, trade sale, whatever? And once we've done that, we then realised he didn't need funding for the entire project. He only needed funding for a handful of samples. And that meant that he did it with friends and family instead of going out to raise money at big time. And that, of course, is a huge advantage for anyone. Once he did that, of course, he had a half a dozen samples. He was able to do licensing deals nationally. Now, it turns out that the industry globally is dominated by just 3 players. So doing a deal with one player was enough to get him well, equivalent of about a quarter of the world's market. These companies that make these also own most of the outlets who retail them, and if they don't, they own them as franchises and franchisors, and they ultimately control what goes into there. So he had to do a deal with one of these in order to get all of them. Now, where a process really can help, this is David. David created solo sheds in his spare time. Great little concept. His unique selling proposition was farmers could erect any shed on their own. It didn't matter if it was a 12 square metre, 12 metre by 20 metre, bigger sheds. It was huge sheds, these big barn type sheds. They could all do it on their own. And the way he did it was, instead of having lift up gear and cranes and moving platforms and concrete around it and everything else, he just put all his posts in. He built the roof on the ground, and then he uses winches on each of the posts to lever up to walk around one at a time, bring them up by 4 inches, and ultimately the roof was the right height. And once he got it at the right height, he pinned it, bolted it, and then took out the winches and gave them back to the company who supplied them, supplied the thing because it was a buyback agreement, and therefore the cost for any farmer doing it themselves means that one person could do it. They didn't need any crews. They didn't need to coordinate any crews. All they had to do was get their product flat pack delivered to site, and they could put it up. Didn't matter whether they had one or many roller doors and windows, whatever. It didn't matter. It was all there. Now, they calculated the leverages for prospective investors, and the way we did that is the industry is dominated by about a dozen different franchise groups who don't have any differentiation. They're really just selling price or immediacy, or there's not much else. And farmers, because they buy sheds, they don't buy sheds. And we're talking farmers or rural here, because they have the biggest problem getting equipment to site. Now, those guys don't buy sheds every week, so they don't know, they don't have experience in buying sheds. So these guys, it was whoever was there first with the best price got the deal, and they found out afterwards which was the best deal. So what he did was he went back as a leverage and said to these resellers, find me one of your key quotes that you've done that you didn't get because of the installation price. So we use the cornerstone model once we've done that to fund the whole project. So the cornerstone investor model, I'll talk about a little bit later on. It's all about making sure that people in the industry or the market will invest in your project and get it going. What these guys did is to get them to sample it. They just took projects that they otherwise had quotes they'd otherwise lost, requoted them based on free installation, do it yourself. And once they got the deals, they all had a sample of it. Everyone was ready to go. Now, the commercial model allows the shed groups, as I mentioned, to go back over their lost sales and requote them. That got everybody's involvement right up to 100%. We set up the distribution through existing franchises. We didn't have to reinvent one, although we could have. We could have put a lot of them out of business doing that. But what we did is just say to them, keep your current sheds, sell it exactly as it is. We're just giving you a method to build the roof on the ground and raise it up later. And then we should also have a way of leveraging up the sidewalls. So it's still a one-person job using the same winches. So once we did that, we used trade show walkthroughs to license in the USA. Trade shows are a target-rich environment for licensees and the likes. And so in a case like that, you really want to be able to get access to 10 people and get 4 of those interested in doing a deal. So in that, what we did was we took the, we have a process within our online learning called How to Walk a Trade Show. You just download the module. It's a 7-week module to get you from qualifying the show all the way through to negotiating the final deal. And it's on week 5 or week 6, you're at the show. And then week 7, you're negotiating with those people before you head back home, wherever home is. So we did this quite extensively for people to do it, to follow the dots, join the dots, what I'm going to do now, what I'm going to do next. And that sort of list of procedures is with videos, support and everything else, is how we've done the entire course to make sure that people could walk a trade show without any learning and know exactly what to do, including all the scripts you need. Then once you've done that, he'll use a cashless transaction model as a value realization point for everyone. What we do is, instead of selling the product, offering the product for sale, and somebody's going to come up with the cash, and it might be, let's say, $10 million for something like this, we would go to a publicly listed company in the industry and we would say, you can give us $10 million worth of equity in your company and we'll give you 100% of the equity in this company, and we merge. And as a result of that, we also are able to negotiate leverage further by saying, the price you agreed to is $10 million. We think it's worth 15. So we're going to ask you for another $2 million worth of equity on options, subject to this achieving this price once you get going. If you can do that, that's what we get. And so a lot of people will do that because it's the bonus really is